Hi students, in this video we are going to learn about differences caused by an error. So in our previous video we discussed very clearly about the timing differences. So because of timing differences, our bank passbook informations and cash book bank column information will not tally. So that is the base to prepare bank reconciliation statement. That is what we have discussed in our previous video. If you fails to watch previous video, you just watch and come to this video. If you are watching this video directly, you may not understand. Okay. Then sometimes the difference between the two balances may be accounted for by an error on the part of the bank, or an error in the cash book of the business. This caused difference between the bank balance shown by the cash book and the balance shown by the bank statement. See, bank statement and cash book bank column, it will not show the same balances. So it is the need for preparation of bank reconciliation statement. So if they leave any errors, whether business firm leaves some errors for recording while recording the transaction, or the bank if they did wrong totaling or wrongly deposited the check, whatever it is. So like this kind of errors made by the banker also will affect the balances of bank passbook and the cash book. Okay, errors committed in recording transaction by the firm. You should know before that what is the meaning of commission and omission. See, committed errors or commission oriented error means errors of commission. We will study about it in our next chapter very clearly. What is the meaning of commission errors and what is the meaning of omission errors, and partly commission, partly omission, while preparing trial balance, which will affect trial balance, which will not affect trial balance, because trial balance shows very clear information about the financial statement and everything about the company, all the details about company. So commission, for example, you are the cashier, you should write, you wrote a check to your friend who is a creditor to you. So to whom? To that fellow you are writing a check, amount rupees 2 lakh. Actually his name is Raja or somewhat. Okay, you wrote a check to Raja, amount rupees 2 lakh. But instead of writing 2 lakh in your cash book, money goes out, isn't it? So where it will enter? Cash book credit side you should enter. Cash book credit side, because check goes outside, it made balances decreasing in our bank statement, bank account. That you know very clearly, isn't it? So now directly you will write in the credit side of cash book. So instead of writing 2 lakh, you have written to Raja, how much amount? Instead of writing 2 lakh, 20 lakhs you have written. So 20 lakhs you have written. So this is called committed errors. And omission, what is the meaning of omission? Omission error means you fails to write that entire transaction about Raja 2 lakh in the cash book credit side. That is omission errors. So cash book credit side you should write Raja, amount rupees 2 lakh, but you fail to write this transaction in the bank column. So cash column you don't need to write anything because you issued a check to Raja. So in this situation you fail to write this transaction, which means you leave it, you forget to write it. That is called completely omission, partly omitted, partly committed. So instead of writing 2 lakh, you have written only 20,000. This is also commission error only, but partly omitted and partly committed means each and every transaction should be recorded twice. So once you have entered here, you should write in trial balance also. So while we prepare trial balance, that time you will comes to know very clearly. Partly omitted cut பண்ணிங்க நான் வேணாம், partly omitted cut பண்ணிக்க, அதுல இருந்து அப்படியே உள்ள வந்துரு. Okay, now omission or wrong recording of transaction related to check issued, check deposited and wrong totaling. See, these all are affecting bank, all are being with bank transactions. So what are those? recording of transaction related to check issued, which means check we are writing and issuing to our creditors. So check issued and check deposited. Check deposited in the sense you are writing, you are depositing the check. You are depositing the check means you received a check from your debtor, then you are depositing the check to the bank. That is called check deposited. And wrong totaling. So instead of correct total, you leave some mistake in between while you are totaling. So that is wrong total. These all are which is related to bank. So it is affecting cash book bank column very severely, isn't it? So it will not tally with bank passbook balance. It will not tally with bank passbook balance. So we need to prepare bank reconciliation statement. See, committed by the firm while recording entries in the cash book cause difference between cash book and bank passbook, isn't it? And errors committed in recording transactions by the bank. Sometimes bankers also will leave some mistake. Sir, you told sir that day bankers won't leave any mistake, single mistake. Yes, of course, bankers won't leave any mistake. Definitely bank side they will show perfect result. But sometimes check may be bounced, isn't it? Or some other things happen inside while they are totaling wrong total. Instead of crediting to your account, if they have credited to another party account, same name will be there. For example, Raja. So for Raja's account number ends with 0013. Another one Raja is there. His account number ends with 0031. So instead of crediting amount to your 13's account, that cashier or clerk, he credited money to 31's account, isn't it? He wrongly credited to someone. Here we come across like these kind of issues. Then again we meet a bank manager and he rechecked all the details, and finally yes, he asked apologies. Then he asked us to write a letter. Amount is not credited to our account perfectly like this. Then we have written a letter to the banker. Then banker immediately they changed it. But nowadays, if any fraudulent activities are happened within 3 days, if you are giving intimation to the banker with the help of RBI, we can find out who is the thief and where it is converted and to whose account it was credited instead of your account. So everything they can find out and they can give perfect results to you. But unless or otherwise, if you are sharing with your OTP with others, that is entirely different. Definitely you can't recover your money. So you be careful about it. Okay, next one, errors committed in the recording of transaction by the bank. Omission or wrong recording of transaction related to check deposited. See here also related to check deposited or check withdrawal or wrong totaling. So like these kind of items only, because we are focusing only bank related aspects, bank related amounts. That amount which is related to bank, cash book, bank column and passbook. Bank statement, which is called bank statement, is a passbook. So final balance would be tally, isn't it? If it is not tallying, if it is not reconciling, we are preparing bank reconciliation statement. Okay. Anyway, sometimes these errors are made by the bank. See, personally, you people may be having some experiences about bank issues. Like if you are withdrawing money from ATM, sometimes amount will be debited in your bank account, but money will not come out. I come across this kind of situation, and near to Gandhigram, on One India ATM is there. So there I inserted my ATM card. Then I typed my money, how much I required. Then money fails to come, but automatically debited in my bank account. My card was stuck inside. Then after a few minutes, my card came out, but money fails to come. But it is debited in my bank account. Then what I did, I wrote a letter to that CUB bank manager. Then actually, unfortunately, he is my friend's friend of my friend. Then he asked me to write a letter to his head branch. Then I wrote a letter to them. Then after 3 days only, it was credited to me. So this much issues are there in bank side also. So you be careful. The next one, preparation of bank reconciliation statement. So how we are preparing bank reconciliation statement? After identifying cause of differences, after identifying what kind of difference we met out, the reconciliation may be done by the following two ways. Two ways are there to reconcile or tally the both balances which is in bank column, cash book and bank passbook. So first one is preparation of bank reconciliation statement without adjusting cash book balance. Without adjusting cash book balance, we are going to prepare bank reconciliation statement. Definitely the question will be asked from this only, because it is most important to compare with next one. Preparation of bank reconciliation statement after adjusting cash book balance. So after adjusting cash book balance, we are going to discuss one by one. It may be noted that in the practice, the bank reconciliation statement is prepared after adjusting the cash book balance, about which you will study later in this chapter. So first we are going to discuss what? Preparation of bank reconciliation statement without adjusting cash book balance. Without adjusting cash book balance. Okay. To prepare bank reconciliation statement, under this approach, the balance as per cash book or as per passbook is the starting point, starting item. So what is the base? What is the starting item? That may be balance as per cash book or balance as per passbook. Listen here. So check it out. First one, balance as per cash book. See, in the first item they have given very clearly balance as per cash book. It is begins with cash book balance, bank column, isn't it? Sometimes the balance as per passbook also will be the beginning point. Okay. Now, then after that what they have given? Starting item. The debit balance as per the cash book means the balance of deposits held at the bank. Such a balance will be credit balance as per the passbook. See, I told you already, I taught you in our previous video, our debit balance of cash book and credit balance of passbook is same. See, while we are preparing cash book, we are utilizing what accounting rules? Real accounting rules. Real accounting rules. What is the rules for real account? Rules for real account is debit what comes in, credit what goes out. Isn't it? Personal account rules. Can anyone say personal account rules? Debit the receiver, credit the giver. Okay. Nominal account rules. Debit all the expenses and losses, credit all the incomes and gains. So cash book will be prepared by real account rules. So debit side is the receipt side, credit side is the payment side. So all the receipts items we will enter in the debit side, all the payments item we will enter in the credit side of cash book. Are you clear about it? At the same time, if receipts available amount which is we are having in our hand or we are deposited and amount is in our bank balances, everything will show in the debit side of cash book only. If debit side of cash book is more than the credit side of cash book, it will show favorable balance, which is called we are having sufficient balance at the end of the month in our bank or on our hand. So we are preparing double column. So one column for cash and another one column for bank. So if receipt side is more than the payment side, this bank balances will show in the credit side, which is called debit balance. Why it is debit balance? Debit side is more than the credit side. It is the debit side and it is the credit side. So debit side is more than the credit side. So it is debit balance. So debit balance of cash book. And you know what is the passbook? That also we have discussed very clearly in our first chapter itself. So passbook, if shows credit balance. So you take your passbook. The passbook is available in your home. So everyone nowadays they are having account in the bank. You take your parents' passbook. So there you can see how much amount is credited. Credited means how much amount is increased in your bank account. That is called credited. If any amount, if you are doing POS, point of sales, a point of purchases, or if you are swiping the card somewhere, or if you are buying any product from online, if you are doing RTGS, if you are transferring your fund to someone, your friends, so that time and all your fund will reduce in the bank. That is debiting your bank account. So bank balance wise, bank passbook wise, credit balance is favorable balance, cash book wise, debit balance is favorable balance. So anyway, what is the meaning of favorable balance? Available amount. We are having some fund. We are having amount in our bank. We are having balances in our bank plus balance, which is favorable balance. Whenever we want, we can withdraw that money for our personal purpose. isn't it? If it is business, current account holder also they can withdraw for business purpose. If available only we can withdraw. If it is not available, what we will do? There will be an overdraft. So overdraft facility will be given by the banker only to the current account holder. Current account holder only can enjoy overdraft facility. Overdraft facility. This overdraft facility, if they are availing within 15 days, you should repay. Else that tax interest amount will be increased by the banker. Then we will be burdened as a business concern. Then we have to bear so much of risk. So getting overdraft is not good for the business. So we should maintain our balance with favorable. The debit balance as per cash book means the balance of deposits held at the bank. Such a balance will be credit balance as per the passbook. See, such a balance will be credit balance as per the passbook. So that's why I told you very clearly, debit balance as per the cash book and credit balance as per the passbook are same. Then such a balance exists. Such a balance exists when the deposits made by the firm are more than the withdrawals. See, what is the meaning of deposits? If you are depositing money into your bank account, that is good for you, isn't it? If you are withdrawing, you are taking money from your bank account. Anyway, your bank fund will reduce day by day. See, available balance in your bank account is 1 lakh rupees. So 1 lakh rupees you are having. So now you are debiting 10,000 rupees you withdrawn. 10,000 rupees you withdrawn from the bank by using the debit card, which is called ATM card. So how much amount will be the available balance? 90,000 only, not 1 lakh. 90,000 only, isn't it? So your available balance is decreased from 1 lakh to 90,000. Why? Because you withdrawn amount rupees 10,000 by using your debit card in ATM, isn't it? So anyway, it is decreased. Your bank amount is decreased. Okay. So if withdrawals are more than the deposits, see, if you are withdrawing more and more, if you are withdrawing 1 lakh rupees entirely from your bank account, available balance in your bank account is 1 lakh 10,000 rupees. 1 lakh 10,000 rupees. You need 1 lakh 20,000 rupees. But you are maintaining current account. You are maintaining current account for your business purpose. You opened and running your business. Your business immediately wants amount rupees 1 lakh 20,000 to buy a machinery for your company. So that time you are expecting 1 lakh 20,000 rupees. Can you get 1 lakh 20,000 from the banker? Yes, of course you can get, but actual amount is 1 lakh 10,000 is available in the bank. But you are expecting 1 lakh 20,000. Who will give 10,000 extra to you? But bankers will give. But before giving that 10,000 rupees extra money to you, banker will scrutinize all the details which you have presented while you open the bank account in the bank. So, in the starting stage, while you are opening the bank account, so you should submit your details, which is related to your assets. How much worthable source you are having, like fixed assets, tangible assets. So this and all will be valued by the banker. So from that 1/3 or 1/4 money can be sanctioned by the banker to you, because you are having stuff to meet out this kind of overdraft, which is that you can repay that money to the banker. So bankers are believing you. So that is what current account holder only can enjoy this overdraft facility. So if you are withdrawing 1 lakh 20,000 rupees, here minus 10,000 rupees, isn't it? What is your available amount in the bank? Minus 10,000 rupees, which means you are responsible to pay 10,000 more to the banker. So here withdrawals are excess. Withdrawals are more than the deposits. Already you deposited only 1 lakh 10,000. Now you withdrawn how much? 1 lakh 20,000. Anyway, it is not a favorable balance. It is unfavorable balance. It is called overdraft. Called OD, overdraft. So overdraft is the biggest disease for the business. Some business, to escape from the taxation purpose, they may maintain this overdraft. They may get some amount from the bank to show and to escape from the taxation purpose. Even some more genius companies are there. That is called reverse merger. 1,000 rupees or 1,000 crore, 100 crore profit making companies, what they are doing, they are acquiring which companies goes down in the loss. So if they are acquiring, if they are take over if they are tying up with that companies, they are escaping from the taxation purpose. They no need to pay any taxation amount to the government because they tied up with the loss making company. Now their balance sheet will be equalized. The losses are there. We wanted to come across these all the losses, then only we can make profit. So they are escaping from the tax purpose. In the opposite sense, what I told you before, withdrawals are more than the deposits, that is unfavorable. Likewise, if deposits are more than the withdrawal, if you are depositing more money in the bank, if you are depositing more money in the bank, like 1 lakh rupees you deposited in the first day of the month, and the next day after one week you are submitting, you are depositing 50,000 rupees into your bank, and after 1 week you are depositing 2 lakh rupees into your bank, then available balance in your bank account will be 2,50,000. 2,50,000 here. 2,50,000 rupees is available amount in the bank, but you want only 1,20,000 to buy the machinery. 1,20,000 rupees. So in this situation, your available amount are more than your withdrawal amount. It is withdrawal amount. It is your available amount. So if we are deducting 1,20,000 from 2,50,000, then we are having available balance in our bank account, that is around 1,30,000 rupees. 1,30,000 rupees we are having in our hand, isn't it? So deposits are more than the withdrawal, means that is favorable balances. At the same time, withdrawals are more than the deposit, means that is unfavorable balance. Okay, then favorable balance and unfavorable balance. It indicates the favorable balance as per the cash book or favorable balance as per the passbook. On the other hand, the credit balance as per the cash book indicates bank overdraft. See what I told you, the credit balance of cash book, which means credit side is excess than, it is the cash book, real account rules. So it is the receipt side, it is payment side, so it is called credit side. So credit side of cash book is more than the debit side of cash book. So which shows very clearly it is an overdraft, isn't it? Because your receipt side, how much amount you received, that is very less to compare with your payments. So you are paying more than your receipt, whatever it is allowing. But if your incoming are very less than your expenses, so in that situation you should get amount from outsiders, isn't it? So your payments are more than your receipts. So in this situation you are in a critical position. So it is overdraft. It is called unfavorable balance. So overdraft is unfavorable balance. In other words, the excess of amount withdrawn over the amount deposited by the bank. What I told you already, 1,20,000 is available. See, 1,10,000, but you need 1,20,000, 10,000 more you need. So that also being causes for unfavorable balance. Then you know what's the difference between favorable and unfavorable balance. And we may have four different situations while preparing the bank reconciliation statement. So what are those four different situations? First one is when debit balance, which is called a favorable balance as per cash book, is given and bank passbook is to be ascertained. If they have given bank column cash book, we should prepare cash book, which is that passbook balances. So cash book debit side is the favorable balance, that you know. Debit side, receipt side is excess than the payment side, means we are having available amount. If they given that available amount to us, we should ascertain how much amount should be there in the passbook available amount. So anyway, it deals favorable balance because cash book debit balance, isn't it? So don't think, sir, debit balance means debit is somewhat reducing item, sir. So debit means amount is reduced, sir, like this. So it's a real account rules. That is what again and again I am intimating you. So debit side is the receipt side. So you keep it in your mind. Then only you can practice very clearly. At the same time, we will prepare that trading account, profit and loss account balance sheet in chapter number 11, 12 with adjustment, without adjustment in volume 2. So there it will be different, isn't it? Credit balance and debit balance will be different. So there I will teach you later, because now we are in 5th chapter only. So we have to study 5 more chapters to complete that unit. Okay, next one. When credit balance, that is favorable balance as per the what I told you already. Debit balance in cash book and credit balance in cash passbook, both are same. See, you can keep it in your mind like this. It is the cash book. It is the cash book. So cash book debit balance, and it is the passbook. Bank passbook, who is preparing passbook here? Bankers are preparing passbook. So passbook debit column, credit column. It is credit column. So credit columns and here debit column. It shows favorable balances. At the same time, here credit column, credit side of cash book and debit side. It is a debit side. So it is a debit. So debit side of passbook is unfavorable. So you keep in your mind. Anyway, third one is when credit balance as per the cash book, which is called unfavorable balance. I told you now, credit balance as per the cash book. Credit balance as per the cash book, which is called unfavorable balance, overdraft is given, and balance as per the passbook is to be ascertained. If they have given like this, we should find out balance as per the passbook. Finally, how much amount is available in the passbook. And last situation is when debit balance as per passbook. It is a debit balance, isn't it? So debit balance as per passbook if they have given, we should identify credit balance as per the cash book, isn't it? That is called overdraft and cash book balances to be ascertained.